Hello everyone, welcome back to this tutorial series for Chapter 9 of our Managerial Accounting course, ACCT 428. In this video, we're going to be looking at exercise 9-13A, and this is going to be the last and final exercise that we have selected from this chapter. So let's read the exercise together and see what we need to do. Lumberton Home Maintenance Company, LHMC for short, earned operating income of $6 million on operating assets of $62,500,000 during 2008. The tree cutting division earned $1 million on operating assets of $10 million. LHMC has offered the tree cutting division $1,250,000 of additional operating assets. The manager of the tree cutting division believes he could use the additional assets to generate operating income amounting to $112,500. LHMC has a desired return on investment of 8%. So what's required? A. Calculate the return on investment for LHMC, the tree cutting division, and the additional investment opportunity. So let's start with that. This is a direct substitution in the formula. So let's try to remember the formula first. The return on investment should equal operating income divided by operating assets. Okay, and as you can see from the data given in the question, we do have both of these for all three that we are required to calculate the return on investment for, right? So let's start with LHMC. The return on investment for the company would be the operating income right here is $6 million and the operating assets $62,500,000. So $6 million divided by $62,500,000. Okay. We're gonna use the help of our calculators here. 6 million divided by 62,500,000, and that's gonna be 0.096, which is equal to 9.6%. Okay. For tree cutting division, the return on investments should be, let's highlight, maybe use a different color for the division. The operating assets right here, this is the operating income on operating assets of 10 million. So the operating income is 1 million and the operating assets are 10 million, right? So 1 million divided by 10 million, and that's going to be 10%. Don't really need to use a calculator here. All right. As I said, I'm doing that. Please don't do that in your exam. Make sure you get the correct answer, so it doesn't really hurt to take a couple of extra seconds to crunch the numbers in your calculator and make sure you got the right answer. Okay. Now for the last part, we have an additional investment opportunity. The return on investment for that is going to be right here. Let's highlight it again in a third color. Okay, LHMC has offered the tree cutting division 1,250,000 of additional operating assets. Okay, and the manager thought he can generate operating income amounting to 112,500 from that extra investment. So the operating income is going to be 112,500 divided by the additional investment amount, which is 1,250,000. Okay, crunch the numbers in the calculator. 112,500 divided by 1,250,000, and that's going to be 0.09, which is equal to 9%. Okay, so that is the first part of the question, part A, completed. Now for part B, it says calculate the residual income, again for LHMC, the tree cutting division, and the additional investment opportunity. Okay, again, I'm going to quickly remind you of the residual income formula. The residual income equals operating income minus the required or the desired rate of return multiplied by the operating assets. Okay. Again, it's just a matter of direct substitution. So let's start with LHMC. Residual income is going to equal, we already said that the operating income for this for the company is 6 million, as you can see here. So I'm going to use that again, $6 million minus. Now, what is the desired return or rate of return for the company? Right here, it's 8%. Okay, so that's going to be 8% multiplied by the operating assets for the whole company, which is again right here, 500,000. Okay, run the numbers. 6 million minus, open a bracket in your calculator, 0.08 multiplied by 62,500,000, close the bracket, equals, and that's going to be $1 million. Okay. For the tree cutting division, the residual income would equal the operating income for that particular department, which is $1 million. Again, I'm just borrowing the numbers from here. Okay. Minus 8% multiplied by the operating assets of the department, which is right here. So that's 8% multiplied by $10 million. Turn to your calculator. 1 million multiplied by, open a bracket, 0.08 multiplied by 10 million. Close the bracket, and that would be $200,000. Okay, and finally for the additional investments, the residual income is going to be $112,500, which is the operating income that is expected to be generated from this additional investment opportunity, minus, open a bracket, 8% multiplied by the operating assets or the investment that is going to be offered for the division, which is $1,250,000. Okay. In our calculators, 112,500 minus, open a bracket, 0.08 multiplied by 1,250,000, close the bracket. That should equal a residual income of $12,500. All right. Straightforward, nothing complicated in this question. If you get a similar question in your final exam, it should be easy. If you know the formulas, directly substitute in them. Okay, so what we've done, we calculated the return on investment for each for the company first, okay, and for the division on its own, and then for the additional investment. And again, for part B, we've done similarly. We calculated the residual income for the whole company, which is 1 million, and then for the division on its own, which was 200,000, and then finally for the additional investment to be 12,500. I hope that you found this video useful. This is how you solve a similar question to exercise 9-13A. If you get any similar questions, this is how you do it. If you have any questions, please feel free to drop them down in the comments. This is the final exercise of this chapter. I hope that you enjoyed this series, and I'll see you in the coming tutorial series. Take care.